Well, joining me is Derrell Peel, the Extension Livestock Marketing Specialist at Oklahoma State University, here to talk about cattle industry dynamics. Of course, lots still going on in terms of what we're looking at fundamentally on both supply and demand sides of things. But Derrell, always great to have you back on for this conversation.
You bet. It's great to visit with you again.
Well, of course, kicking things off here is talking a little bit on the price side of things. The unofficial summer season has ended with Labor Day being over, but we're still kind of feeling the effects of the summer doldrums in terms of the futures markets. Live cattle are sitting at about $10 to $14 below their July highs. Feeder cattle off about $30, but if you kind of look at, where we've been 5 years ago, or even looking at 2014, doesn't really seem to be all too bad just in terms of prices.
Yeah, the perspective always helps, right? So, we have it's been kind of a rocky summer in some ways. I think the summer doldrums was part of that. Obviously, we had a big stock market shock in the middle of the summer there that really was, I think, the fundamental basis for the futures market, correcting or arguably overcorrecting so badly. So it's a combination of those things. But the longer term perspective is that we're still at pretty lofty prices in a historical perspective. And I think going forward here, we're going to see this market continue to sort of claw its way back up, a little more based on the fundamentals rather than just, just the trading kind of environment. It's been described as the funds versus the fundamentals, and the funds have kind of had their way for the last month or so, but in the end of the day, the fundamentals will reassert themselves as we go forward.
Yeah, if you look at the CFTC data that comes out each week, it really seems like bearish bets are starting to kind of hold suit here on the fund side of things. I mean, if you look at the good part of a year, we've been teetering about between net bearish, net bullish on what the funds have been doing. But ultimately, it seems like the fundamentals haven't changed. So let's kind of talk about that. Speaking of summer, we've been kind of flying blind, especially this July with the USDA suspending its July cattle inventory report, but not really seen on the monthly cattle on feed reports is really that signs of herd rebuilding. Is that true? I mean, especially you look at the lofty percentage of heifers still on feeds here moving forward.
Yeah, that's the biggest question in the industry, has been for many months, and I think will be for a while yet going forward. The lack of the USDA mid-year report certainly didn't help. We don't get a direct measure of, replacement heifers, which is really going to be the key to initiating some herd rebuilding. So we have to wait now for the January numbers that'll come out the end of January next year. So, we watch the slaughter data as we go through the year. As you mentioned, there's no real indication that that heifer slaughter. It's dropped some. It's dropped a little bit more than steer slaughter, although neither one of them are down as much as I would have expected, frankly. And so and the heifers on feed quarterly data. The last numbers were for July, indicated very near still a 40% feedlot inventory that's made up of heifers. And that's at the upper end of that range. So we certainly have no indications at this point in time that we have started retaining any heifers. I think that'll be a big question for this fall with the new calf crop, if you will, the fall run, is whether or not heifer calves will be held back this fall. We could see some of that, but it's not clear yet that there's a lot of initiative on the part of producers to begin retaining heifers yet.
And if you look at heifer prices, and especially bred heifer prices, those are high. So is that showing that what the producer is doing with them is, instead of retaining those, is they're just willing to let those go and take those higher prices for themselves?
Well, for feeder cattle, obviously that's one of the things is, and it's always true at this point in the cattle cycle, prices start to go up. That's the incentive to rebuild the herd. But at the same time, those higher prices are a real enticement to go ahead and sell things and take advantage of that. From a cash flow standpoint, a lot of producers needed, certainly last year to heal up from drought impacts and high input costs. Maybe some of that's still going on. And then when you look at the bred animals, those markets are going up. I don't think they're as high as they're going to get at some point here when we do start actively, trying to rebuild the herd. But bred heifers, bred cows are all showing those signs of moving higher. And again, for some producers, maybe they're going to go ahead and sell, although from the standpoint of the industry impacts, doesn't matter who has them as long as we have bred heifers, right? And so we just don't think there's a lot of them out there yet that really indicates that we're actively involved in trying to get this herd rebuilding started yet.
So back before we saw this large drop in cash prices and futures prices, it kind of seems like feedlots were willing to backfill pens with a lot of these feeder cattle, pushing these calves forward, capitalizing on these higher prices. But in terms of other factors that we're watching is, of course, weather, because before we started the summer, we seemed to be looking like we were going to be sitting pretty good on weather conditions, especially in cattle country compared to what we've seen in the past few years. However, that kind of flipped the script to where we're kind of looking at these drier conditions again relative to what was initially expected.
Yeah, I think by and large, we've had a better year from a forage standpoint, both pasture and hay production in 2024. And in a lot of places, 2023 was awfully good as well. So, hay stocks are up, hay supplies from a nationwide standpoint have rebuilt, from the lows of the last 2 or 3 years. So I think, in some sense, we're in better shape. However, as you noted, drought conditions have not gone away, and they're certainly redeveloping here late in the summer, and with the kind of weather forecast we're getting from the meteorologist with La Nina rebuilding, I think producers really have a very close eye on the potential for redeveloping drought conditions. Maybe not so much to affect us in 2024, but really the concern is what we might be looking at in 2025.
So is that drought still going to be having a little bit of impact on how much we're keeping back? Because that's what pretty much triggered a lot of this liquidation that we saw 3, 4 years ago. So is that still a driving factor, especially when we're not talking about a potential herd rebuilding until 2025 or even 26?
Yeah, I think it definitely is one of the factors. I think there's several factors that play into it. It's a little bit complicated compared to maybe some other points in history, but certainly the drought. Again, we haven't had a clean break from the drought. It's just sort of hanging around as a threat, if not an actual problem right now for producers. And so I think producers are being very cautious. They either feel like their resources have not healed up yet. Some of their pastures really need more time and continuing better conditions to fully heal up, or they're just really being cautious about fully restocking, maybe to a potential level that they would like to be at, but really just don't feel like the risk is worth it at this point with the threat of redeveloping drought conditions.
So then you might have touched on it earlier too, but kind of what's the Packer doing throughout a lot of this? Because at times it seems like they were maybe a little bit of aggressive that helped prices out a little bit, but ultimately they're still dealing with harder margins due to higher cattle prices. So what are they seeing here in terms of what they might want to be doing to counteract still this majorly tight supply?
Yeah, I think Packers recognize that they're in for an extended period here of challenging conditions. Really, everybody above the cow-calf level faces, they're all margin operations, whether we're talking all the way down to stocker producers or feedlots or packers. Everybody above the cow-calf level is a margin operation. And in this kind of an environment, the market is really focused on the cow-calf level, trying to stimulate herd rebuilding. And so those margins tend to get squeezed because the bottom end tends to be going up faster than the top end at every level. And so packers have that margin squeeze. One of the ways they're dealing with that is really kind of being co-complicit with feedlots on pushing these cattle weights higher. Carcass weights are well above a year ago. So much so, and actually feedlots have extended days on feed to get those higher carcass weights. That's how they're keeping feedlots as full as they have. But all of that has resulted in, if you break down cattle slaughter this year, or beef production actually, into fed and non-fed components, fed beef production is actually up this year. With fed cattle slaughter not being down as much as we earlier expected, and the carcass weights being so much heavier year over year, fed beef production is actually higher year over year. Now, total beef production is down slightly, less than we expected, but all of that decrease is coming from the non-fed side. It's coming from the sharp decrease in cow slaughter that's really pulling down that non-fed side. So on the fed side, I think packers and feedlots are both trying to maintain volumes as best they can in various ways. And in the case of the packer, one of the ways they can try to maintain volume of pounds in lieu of more numbers of cattle is to sort of be willing to accept those cattle at higher carcass weights.
Yeah, and that's really interesting that you bring up that dynamic specifically, is that we are seeing higher production numbers because they're there. The weights are there, especially to make up for the reduced slaughter. Because if you look at the cold storage reports, you think that with prices the way they are, we would be underneath maybe 2014 levels in terms of our overall beef supplies in the US, but that really hasn't been the case lately either.
Yeah, again, we're doing what we can. Now, if you think about the implications of this in the meat side a little bit, obviously with heavier carcass weights, we've got cattle that have got a lot more fat on them. We're producing, and the grading percentages, the yield grades, I should say, are a challenge at this point. We're running in excess of 20% Y4s and 5s. And so we've kind of got an excess of fat in the market, if you will. The place that we're tight is on the lean side. And of course, from a ground beef market standpoint, much of that comes from that non-fed beef side. So the reduction in cow slaughter has really squeezed the non-fed supplies. And we've had record level trimmings prices and, sort of wholesale ground beef values. That has a fairly big impact on the market relative to fed carcass cuts.
Yeah, definitely being reflected in the price side of things. But you did segue a little bit into beef. So let's talk about beef a little bit on the demand side of things, especially is, of course, exports. Everyone's closely watching exports that, we're down about, or we're down over year over year, of course, but July numbers that just came in here this last week were up a little bit on 2023. Even with these higher beef prices, that seems like the export value is also trying to counter this tight supply that we've been seeing here recently as well.
I think the exports are actually holding up pretty well in the face of this. Now, again, we actually have an increase in fed supplies, which removes one of the challenges. Last year, of course, beef production was down year over year, and that was part of the reason we saw a significant drop from the 2022 record export levels into 2023. But as you noted, with the July numbers now actually being higher for the month on a year over year basis, for the year, we're down about 2.9% for year to date beef exports. And if you look at it, of course, Mexico's been an anomaly all year compared to all of the rest of our markets on both the export and import side. So we've exported more beef to Mexico and imported less from them, which is counter to the general trend of both of those for almost all our other markets. But as of July now, for the year to date, Japan is actually up fractionally on a year over year basis. So both of those markets are at least a little bit higher than a year ago. So I would say that from the standpoint of international demand, beef is holding up pretty well, all things considered.
Yeah, it's funny because everyone's talking about Mexico when we're looking at our corn exports, looking at our pork exports, but all of a sudden recently it's like, look at beef. Mexico has really been helping with a lot of that international demand. And as you mentioned, Japan, it seems like the Asian markets, if they're trying to bounce back, I know we're still looking at some potential global economic slowdowns, but it seems like the Asian markets in terms of beef demand is still kind of holding up a little bit.
Yeah, I think, again, they're sort of stabilizing. We're still down significantly in South Korea relative, but, again, Japan has come back a little bit. I think we are seeing those markets kind of stabilize and maybe rebuild a little bit in the environment that we're in now. And again, the situation in Mexico has been really quite impressive with the exports going up and the imports coming down in that market. So that's been a nice change and a nice boost to the overall trade picture.
Yeah, but even on the import side of things too, you mentioned lower cow slaughter. Ultimately, lower cow slaughter to make up for some of these lean supplies is to, of course, bring in those imports.
Yeah.
Imports quite strong year to date, especially when you look at your Canada, your Australia numbers. Even look at Paraguay. I know we're not a huge import of Paraguayan beef, but it seems like ever since that they got the green light to start bringing supplies into the U.S., they've been even increasing some of their numbers.
Yeah, again, obviously the demand for that lean beef is very, very strong. And so we have seen, and, again, sort of to be expected in this broader market environment of reduced production generally. The market's going to look for those supplies around the world. So, we continue to get a lot of beef from Canada. Australia has really bounced back, and part of that's just a function of what's happened in that country with their herd rebuilding. I just saw recently that maybe their herd has actually peaked out in some sort of cyclical fashion and may actually begin going down, which will lead eventually perhaps to tighter supplies there. But maybe in the short run, liquidation usually means a little boost in supply. So I suspect we'll continue to see quite a bit of Australian beef for the foreseeable future. And of course, market prices in the US are very attractive. Again, we've had trimmings prices for processing beef at record levels this year. So that's pulling in beef from any source that really fits the market.
So lastly, on the demand side, though, is how is the American consumer responding? That's a big piece of it too, is that if you look at the government economic data, there suggests that, there's a little bit of a slowing on our domestic side of things, even our prices backing off, especially with wage growth kind of slowing a little bit, unemployment's kind of rising, but ultimately, has that had a big impact to where demand's going to see a little bit of a hit on the domestic consumer side of things?
I don't see a lot of impact on beef prices. If you look at box beef prices, wholesale values are running, pretty close to year-ago levels. They've been just kind of plus or minus year-ago levels most every month this year. If you look at the individual cuts, there's been a little bit of weakness in some of the high-end middle meats, but a lot of that is seasonal in terms of summer. As we get into the fall and cooler weather, we typically see restaurant traffic pick up a little bit. So we'll have to wait and see kind of going forward. We've had strong demand for some of the leaner cuts of the carcass, and some of that's coming over from that ground beef market side, because in fact, trimmings prices have been higher than a number of, for example, round wholesale values. And so that's pulling some additional product into those markets. But, when you put it all back together, I think beef demand has held up pretty well. I don't see a lot of evidence we talk about trading down, consumers trading out high-end products for maybe more value cuts and that sort of thing. It's hard for me to definitively say that we're seeing a great deal of that. And obviously, at some point in time, as we go forward, we're going to see tighter supplies. So, some consumers will eat less beef, but that's just the market rationing the available supply. It doesn't mean that demand has really taken a hit. And at this point, I don't see a lot of impact on demand relative to the supply situation.
A little bit of a good sign for producers here moving forward. But as we kind of round out and as we're looking at all these different dynamics, what are you kind of watching the most closely here moving forward? Is it looking out further to that January inventory report since we didn't get the July, or is there something a little bit more near term than that?
Well, we continue to watch the slaughter and the cattle on feed numbers. Feedlots have been remarkably good at sort of defying gravity, with cattle numbers overall clearly getting tighter for about the last 5 years, and yet feedlots have seen a relatively minor decrease in inventories, and that's because we've continued to feed heifers. It's because we're feeding cattle longer. So I think as we go forward, there will be a squeeze in those numbers, and I'm still looking for that as we go forward. But I think the real issue now is the longer term picture of the indications of herd rebuilding. Certainly not happening in 2024. I think we're probably still getting smaller. We'll have a smaller cow herd come January 1 of 2025. And even the question for 2025, I think, is sort of up in the air. We really have very few heifers in the pipeline that we brought into this year. So we don't have a lot of bred heifers potentially available to change things for next year. So I think 2025 will be maybe a case at best of stabilizing the herd, and any real potential for herd growth is probably beyond 2025.
All right, really interesting things to be looking at moving forward here, but always appreciate the good conversations. Again, that's Derrell Peel with Oklahoma State University. Thank you again for the conversation.
You're very welcome anytime.